Now, the Competition Commission has made it clear that it will continue to closely watch the price of volatility of food items as businesses continue to increase prices on food items. They, of course, have to be able to justify these increases. So how exactly is the Commission going to be making sure that retailers are putting in justifiable hikes and they're not inflating prices to take advantage of the consumer? Let's speak now to Thulani Mandiriza of the Competition Commission. Thank you so much for joining us this evening. So we have just heard that year on year, food prices have gone up on average 11%, which is really a lot of burden for the consumer. How do you monitor the retailers to make sure that the hikes are justifiable? Because we know that there are a lot of pressures on food prices.
Thanks, Sally. I think, like Mervyn has correctly pointed out, I think we have seen, these food increases. But I think from the Commission side, we do, follow, the upstream, within the food commodity prices, so that we identify which products are likely to increase and to what extent would that be, would that increase be. So we do really follow the retail prices, but I think, as you would know, retail prices is just an outcome of a lot of activities starting from the manufacturing side. So as the Commission, we look at the producer price index. We also look at the retail price. But I think the key important factor for us is to track, whether there are changes in the margins that either the manufacturers are getting or whether the retailers are getting. So I think that's one of the variables that we do monitor. Over and above that, I think the Commission, since the advent of COVID in 2020, we have been having high-level engagements, I think, with most of these food retailers, food manufacturers, and at least they are aware of how the Commission is going to assess some of these price increases, so that at least they know that we are also having a particular keen interest. So I think there are many ways that we monitor. But of course, the consumers also can alert the Commission if they think maybe some of these costs, some of these prices are unjustified, and the Commission would really get involved and investigate. But I think, like Mervyn have said, I think there are global and external factors, but I think our interest is really to tease out and check if there isn't any opportunistic behavior that would creep into this, trying to hide behind the external and global factors. So I think we have seen that during, the advent of COVID, where in the month of March 2020, there was some opportunistic behavior where the margins have really increased. But after the Commission started investigating, I think the margins really fell back into line to pre-COVID levels. But I think, Sally, one of the things that I think we have to contextualize, I think that the problem of food in South Africa is the level, the high concentration that is there within the food producers. So it's a small number of players, which would also compound, some of these factors that we are seeing. I think you are aware the Commission published a concentration tracker study, sometime last year, March 2021, where we have identified that the structure of this market really is problematic, because there hasn't been so much entry. There have been a lot more consolidation, which is not very conducive for competition. So I think that's some of the factors that I wanted to add.
All right. Well, that's very comprehensive, Mr. Mandiriza. I want to speak to you about something that Mervyn Abrams mentioned. In the last year, the price of cooking oil, a 5 litre, has gone up 52%. And that has also a knock-on effect, because that's one of the key ingredients in so many foods that are produced. I know that there's concerns that there was possibly someone taking advantage or some retailers taking advantage. Have you looked specifically into cooking oil? And can you say with confidence that those increases are really out of the hands of our local retailers?
So I think the cooking oil, I think we just have to give some background. So South Africa, we are a net importer of of the oil seed, that is required to produce some of the cooking oil. So, for instance, in our last, essential food price monitoring, we indicated that, we have exposure. So South Africa uses 38.5%. South Africa, I think, consumes 38.5% of imported product when it comes to cooking oil. So we already have some exposure already there from imports, and I think with the rand weakening and the global development, so I think that would just add on to the pressure. But maybe to answer your question more specifically, for us to be able to ascertain, the exact, we have to look at maybe the cost elements at each of the food importers. But I think, like I've said before, we are tracking the margins. So where we have seen that the margins are outside, I think the Commission would initiate and make an investigation. It's just that I think the period really had a lot of compounding external factors, which makes the assessment a little bit tedious, but I think it's something that we are tracking, especially just looking at the margins and see if there's anything that is that creeps in that is a bit suspicious.
Yeah, and you're right, as you said, there's quite a lot to factor into these increasing prices, and sometimes it's absolutely justifiable and out of the hands of the retailer. An important point you make, though, is that you're monitoring, keeping an eye on these prices to protect the consumer, and the consumer, if they see something they think is really unfair, you are also there to investigate. Thank you very much for just reminding us of that you are keeping an eye on those prices. Competition Commission's Principal Economist, Thulani Mandiriza there.